Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Good morning, everyone. Welcome back to another live stream and happy, what's today? Today's Wednesday. Happy Wednesday to you. Hope you're doing well. We've got a pretty big day today and tomorrow. We're going to get some inflation data from the US to see how things are going on the price stability side of the Fed's mandate. Today, we're doing something pretty cool. We are streaming to more locations than ever. We're streaming to YouTube, Twitter, we're streaming to Instagram, we're streaming to our Telegram channel. We're streaming all over the place. So it's kind of cool. I hope everyone is trading safe in these crazy markets here. We're going to jump right into some chart markups, talk about some trade setups, some things that I'm watching, and of course, react to the big number that we get in the producer price index number coming out in just about 10 minutes. As we get started, if you are a fan of the show, we've got a great lineup here today. Marco is going to be coming in after I am done. Should be a lot of fun. So if you could hit the thumbs up button, subscribe, follow wherever you are watching. Appreciate it. Okay, so first and foremost, I wanted to talk a little bit about where the US dollar is trading here. We've been consolidating for the last few weeks. We do see price making a push below this support level, now retesting it today. I think you have a big question mark around inflation today. Specifically, we want to know, is inflation cooling or is it going to continue its march higher? We've seen in the recent months, I should say, some rise in inflation. And I'll show you specifically what I'm referring to. When we take a look at the producer price index, remember that last time around, we had a big spike in the producer price index in August. And it spooked investors a little bit, right? Because you had expectations for the producer price index to come in around 2.5%. We got 3.3%. And that was a bump to the upside that was not particularly welcomed. Remember that the producer price index is the wholesale prices, right? These are on the corporate side of the supply chain, right? The manufacturers moving stuff, supply chain stuff. Keeping an eye on prices in that area is really important because oftentimes when producers experience inflation, naturally the next step is for them to often pass that on to consumers to protect their own profit margins, as any business would. So the idea there is that if you have higher inflation on the wholesale level, it is likely to trickle its way into the consumer price index, right? CPI and PPI. That's why these two things go hand in hand. So today's number is really important. We've got about 9 minutes to go until we get into that data point. You've got the stock market still at all-time highs. People still feeling really optimistic around the idea that, okay, we're going to get rate cuts so we can handle a little bit of cooling in the economy. That seems to be the narrative, at least, is that companies are still growing. Yes, the economy is showing signs of cooling off or even slowing, but people are kind of willing to look past that because we're going to get rate cuts and the corporate earnings are still strong, which is a fair case, and why the stock market, again, I think is still holding on to those all-time highs and why stocks are still very expensive. Meanwhile, however, you also have a sharp rise in the precious metals world. We've talked a lot about this, of course, gold and silver continuing their rise to the upside. You've had just a massive surge in the price of gold here as people have been a little bit worried, right, about the slowdown in the economy. There's sort of this tale of two markets right now. And to be completely honest, you can look at this market, and I say market as in like, the S&P 500, across the whole lexicon of financial markets, you can look at things a little differently depending on who you ask and how you want to answer. If you are somebody who is more optimistic about the market, again, you can kind of lean into the idea that corporate earnings are still really strong and that rate cuts should help to spur growth, right? Or help people out. That would be the glasses half full perspective. But then if you want to flip it around, you could also point out that employment data is looking rough, right? So the jobs market is not what it once was. It's looking much worse. We had a huge downward revision yesterday, showing, I think, a little bit more clarity on the state of the labor market in the US, which is a slowing one. So you have less hiring going on, less job openings going on. Have not seen huge spikes in layoffs or a huge spike in unemployment, but it seems like this marketplace of low hiring and low firing, if that makes sense. So you have a circumstance where people are a little bit worried about the state of the labor market. And yes, rate cuts are also bullish for gold. So the clear winner, the easy trend right now is still a bullish perspective in the precious metals, in my personal opinion. Also, hope everyone on Instagram is doing well. I'm streaming to a couple different locations, as I mentioned. We're streaming on Instagram, streaming on, where else are we streaming? Telegram channel. We've got a bunch of people over there. So we got 700 people watching between all the different platforms, which is really cool. I guess I can't really tell if it's counting our Telegram viewers, but we have, what is this? 50 people on Telegram watching. So shout out to my Telegram viewers. Thank you for being here. Did you stream in Telegram earlier? Yeah, I did. I did like a test stream. So today is the first official live stream within the Telegram channel. So the question is, guys, what's the correct way of looking at things? Should we be looking at the economy and saying the labor market is cracking, get out of stocks, watch out, recession is coming? Or should we say, hey, you know what? The labor market is slowing down a little bit, but the Fed's going to cut rates and, things can continue to roll higher for stocks. That's the big question, right? And again, the way to answer that for me is all about risk to reward. Is there a world in which we get inflation actually cooling off and the labor market, yes, is cooling, but rate cuts are coming in just in time to sort of save the day? It's possible, right? Never say never. And this is what's hard about the economy. It's very hard to make predictions about the future of the economy, but all we can go off of is the trend, right? At the end of the day, that is, they say, don't fight the trend for a good reason. And right now the trend on the labor data looks pretty rough. So to me, this flags substantial, concerning figures. Also, that minus 911,000 jobs, this looks like an error because although that is the number, there's definitely something up with the NFP report. I'm going to have to send that to our developer to take a look at. But yeah, we had huge downward revisions yesterday. The labor market looks like it's in a little bit of trouble, at least cooling. And if you want to be a little bit more concerning about it, it looks like it's straight up slowing. So we'll see. But to me, that is just a point of contention where I'm like, okay, I can't really justify getting super heavy long stocks at their all-time highs. We do still have that tariff uncertainty, that potential inflationary pressure to the upside. We did see that last time in the producer price index. Will we see it again here in the next few minutes? We do have producer price index numbers coming out in just under 3 minutes. So I'll be here, of course, to cover what that data points, what it means for the inflation story. Today and tomorrow are both very pivotal for inflation as we get the consumer price index number tomorrow. If you get a high spike in inflation, higher than expected, which let's actually make sure that we pull up our data here. So if I go FX Street, I'm just going to pull up our economic calendar just so we have a reference point here. We have the producer price index number coming out, I mentioned, in just over 2 minutes here. So if I pull up our producer price index number, we are forecasting for a year-over-year number of 3.3%, which is the same as the prior time. If we exclude food and energy, consensus is 3.5. Previous was 3.7. So again, last time we had a big upward surprise. Will we get another big upward surprise, which I think would potentially spook the market, or a downward, like a less than expected? If you got like 2.9, 3.1, 3.0 on the producer price index numbers, stocks would probably rally. So would gold. The interesting thing here, and I only have 1.5 minutes to go. We discussed this in our Discord yesterday and on the video yesterday, if you saw it. Both inflation points, like if inflation is high or inflation is low, I still think the catalyst for gold is to the upside. Why? If inflation is higher than expected, stagflation worries remain elevated, right? High inflation, low jobs growth. That's an environment where gold can still do well. What about if inflation comes in soft, right? If inflation comes in cooler than expected, the Fed is more likely to cut interest rates. That's also bullish for gold. So does that mean gold has to guaranteed go up today? No. But I think that's why gold has already been trending up. Is smart traders, smart investors are saying, okay, most scenarios right now point towards gold moving higher because you have either stagflation risk or rate cuts. Both are good scenarios for gold. I hope that makes sense. That is something that is really critical if you're trading gold right now. And why? Look how long gold has remained overbought. I don't think that has to change in a hurry. It could if something dramatic changes within the market. If you get, some sort of geopolitical resolution, peaceful, resolution specifically, that could send gold lower or something like that. But path of least resistance for gold remains higher, in my opinion. A pullback would be preferable for buys for me personally. I'm already long silver, so we'll see how this impacts. Guys, we got about 15 seconds to go here before we get the producer price index. We can go ahead and roll our breaking news coming in. All right, let's see what we get here. Let's switch over to our all markets view just so we can keep an eye on this. Okay, so initial move higher here for the dollar is lower. Stocks are higher off of this initially. Bitcoin is making a push higher. Gold and silver also moving higher here. You have a pretty good move higher in stocks, at least the initial bump here. S&P 500 up 0.4%, NASDAQ up 0.5%, although Wix forming on the top. Let's see what the number actually came in as. Let's see, what do we get? Okay, so 2.6%. So inflation came in softer than expected, guys. 2.6%. So we were expecting a year over year figure for the producer price index number to come in at 3.3%. 2.6% is a cooler than expected print. That is a good thing for rate cuts, right? So rate cuts are now very much on the table, as if they already weren't, right? We already knew we were going to get rate cuts in 9 days from now or whatever it is. But this all but, locked it in for certain. That telling you that inflation is not necessarily out of control, at least from the producer price index. Tomorrow we get the consumer price index number. Do not sleep on the importance of the consumer price index number. We can't draw from this, certainly we are going to have a low CPI print. But this is a very welcomed figure. You see Bitcoin making a push higher here. Gold and silver also pushing higher here. Let's take a look at gold. Again, remember what I just discussed. Most scenarios continue to favor gold bullishness. If it's a tough environment to be a gold bear, because what do you want? You want inflation to go high or low, right? If you want inflation to go high, all right, stagflation risk. You want inflation to go low? Well, that just means rate cuts. That's arguably even more bullish for gold. So to me, what you have here on the table is a scenario where there's just a melt up happening in gold. It is very, very difficult to time the top of these kinds of moves. And I would argue it's kind of like a fool's errand to even try. Like the better strategy, in my personal opinion, is this is going to be obviously hindsight, but to have already been long before this kind of move, or to wait for pullbacks if you're not in it, right? The system here has been telling us US data has been coming in really soft. Jobs data has been really weak. It's been in a downtrend, secular downtrend, actually for a lot longer than we thought, with those huge downward revisions in the jobs data. I mean, the last year and a half, we've probably just been in a slow deteriorating jobs market, and things now start to be speeding up to the downside. So probabilities for a Fed rate cut, probably going up higher here today, which is arguably why silver and gold retaking their momentum to the upside. Bitcoin, I have a short position on this one, probably going to get stopped out here today. I'll show you my P&L on this one. IBIT down $968. This is probably going to be $1,000 loss for me, which is what it is. It is part of trading. You're not going to get them all right. Again, if this thing breaks through these highs, very likely that I'm going to go ahead and take a quick loss on this one. I'm also long SLV, which is the silver ETF. This one is going really well, though. So doing just fine on the silver side of things. I've trailed my stop loss further in to profit. I'm looking for an opportunity to do so again. If we can take out these highs, I'm going to trail that stop further into profit here, just lock in a little bit more on the trade. But looking good on silver, looking not so great on Bitcoin, and we'll take a loss if need be. Let's take a look at yields. So yields are lower here today, right? So this is, again, increasing probabilities that you are going to see the Fed rate cut in September. There is also a very modest potential for a 50 basis point cut or a 0.5% rate cut. Now, most Americans would love this. They would welcome the Fed to lower borrowing rates, especially people who have loans, people who want to purchase homes. They want mortgage rates to come down, right? Things like that. I think it's very welcomed by a lot of people. My opinion on the matter is I think the Fed should cut 0.5%, but I think the Fed will probably actually only cut 0.25%. Why do I think the Fed should cut rates? Well, because I think the labor market is in trouble if you don't start moving fast. Now, I think part of the reason they won't cut interest rates by 50 basis points or 0.5%, I think the reason they might not do that is because they might realize that that could signal exactly what I just said. It might signal to the market, hey, we're in trouble and we're cutting rates quickly because we might be behind this thing, right? So I think they won't do that simply because of how it might look. I hope that makes sense. But there are, human emotions tied to these things to some capacity. And so I don't think the Fed will cut rates by 50 basis points or 0.5%. But I do think there is an argument to be made that they should. That's personally where I'm at with it. VIX is moving lower here. Dollar index moving a little bit lower here in response to this. Take a look at your 15-minute chart. Price moving lower on dollar. Gold initially spiked, actually losing some of that momentum here. Same with the stock market. You did get an initial pop. Let's see how these candles close. Arguably, this is a nice upward catalyst for stocks, right? Remember that cooling inflation suggests, okay, Fed has room to cut rates, right? Nick, can we say that PPI has a direct proportion effect on the CPI numbers? If yes, can we also say that we will get a surprise in the CPI numbers too? Sparks, that's a great question, and the answer is kind of, right? A lot of the same factors that are going to impact the producer price index are also going to be into the consumer price index, right? So the thing is, the market's smart. They already figured that out too, right? The second this number came out, the market moved saying, oh, well, CPI is probably going to also be a little bit cooler, right? It's not a guarantee and it's not 100% because you could have certain variables within the consumer price index that might have spiked higher, right? But the probabilities for a lower than expected CPI print already are being priced into the market. That is why the market is hard to beat. It's very smart. It's figuring this stuff out. So your analysis is correct. It's just that the market is also thinking that too. That's why the market is making that push. Again, S&P 500 here near session highs. NASDAQ breaking all-time highs here as we speak. Really impressive push for the stock market in response to this dollar index. A little bit soft here at resistance. Keep an eye on gold. Let's see how it reacts here. I think that in terms of the price action here, you want to see momentum just continue. And what I mean by that is that you have this trajectory. You want to see this trajectory continue if you're a bull. If you're a bear, obviously you don't want that to continue. You want to see signs of reversal. But what I mean by momentum needs to continue is that when you have these kinds of moves, right, you want to see them not hesitate to keep pushing, because everybody knows, okay, gold's a little overbought here, right? Doesn't mean it has to reverse. It could keep going, but you want it, if you're a bull, you want it to stay kind of pushing the envelope. You don't want to see it start stalling, because a lot of times overbought plus stalling, that's where you actually can start to get that momentum rollover. So we'll see, but we will be monitoring gold and silver prices. Again, silver a little bit soft following that. Gold, same thing, a little bit of a muted response to the inflationary data. Again, cooler than expected. This helps the story in terms of rate cuts. Stocks like this because, again, it means more probabilities, more of a case for reducing borrowing costs, which is arguably an injection of stimulus or liquidity essentially into the stock market. Long story short, you cut borrowing rates for everybody. It finds a way to funnel right back into the big stocks within the corporate America, right? Because that's where people spend all their money. Eventually, it funnels into the big names. We also have Dow Jones pushing through those highs, or at least trying to make a push through the highs. But keep an eye on this, guys, because again, is this enough? Is this enough to really keep the market pushing? I think you have to be careful because you could very arguably see this pop here today stay muted as we continue to await arguably the bigger component, which is the consumer price index, which comes tomorrow morning, right? So you're getting a little bit of a pop initially. I would not be surprised if we just sort of stabilize where we are. And, I would be a little bit more surprised if you saw this thing just drive through the whole day. Could happen though. Crazier things have certainly happened. So we'll keep an eye on the indices here. Taking a look quickly at currencies, euro dollar, pretty unchanged. Pound dollar sitting there at resistance. Let's see if we can get a break through those highs. The Australian dollar, also nice decisive push here. Watch how this candle closes today, because if you get something like this, if you get a candle closure here, pullbacks into support, could potentially be a continuation trade or setup. We'll see how that settles here today. Let's see. Going back quickly here just to check in on the indices. Take a look at your 15-minute charts. Again, push up, a little bit of selling in response to this. I, again, would not be surprised at all if you see this kind of move. Just sort of stay muted. Doesn't necessarily mean the market turns super bearish, just that, again, you're still waiting on the consumer price index tomorrow, which can potentially nullify what you get in producer price index. Sometimes you see these things reverse each other, where one is hot, one is cold. Most of the time, though, data sort of tends to fall together. Like, for example, we just got done discussing jobs data, right? Last week, you just had a swing and a miss completely from jobs data. Like, all of our indicators for jobs, all of the metrics that we stare at, right? They all came in soft. And most of the time, you see a lean one way, where like data points are somewhat correlated and connected. We want to keep an eye on those things because, again, if you get a mixed report, you don't want to be overly bullish or overly bearish. But if you get a confluence report, again, I'm feeling very much bearish on the dollar here, especially with a cooler than CPI print. You have jobs data, which is looking rough. You combine that with cooling inflation, that is straight up bearish for the dollar, right? Because remember, rate cuts, bearish for the currency. So that plus soft jobs data, no bueno for the dollar. I would not be surprised if the US dollar continues to sort of fall. You're getting a little bit of a bounce back here. My opinion is that path of least resistance for the dollar index, we're retesting this area of support on the daily chart. Would not be surprised if this does find sellers here. Again, same concept as the stock market that we just got done discussing. You're waiting for CPI. So if you get CPI that comes in tomorrow and it's hot, then what I just said, throw it out the window. That's why I think the market is saying, okay, let's just wait, right? We shot lower initially for dollar. We shot higher for gold and silver. We shot higher for stocks. You're seeing, I think, a muted response because arguably you still have the bigger of the data points to come out tomorrow. So it's like, let's not get ahead of ourselves. We've still got something to watch for tomorrow morning on the U.S. inflation report. In terms of trade ideas, I am still looking for pullback buys on gold. I'm already long silver. So if metals keep going, great. This is a bullish setup for me, going to stay on the bullish side of things. We have a laundry list of things to look at here today. So I hope that you will stick around with me for a little bit. We'll talk about some trade setups here. I'm going to rapid fire go through our top setups here today. What you're looking at, by the way, if you are new to the stream, we have probably a lot of new stream viewers. We're streaming to a lot of different places. We're streaming to Instagram, Twitter, YouTube, Telegram. thank you for being here. If you're enjoying what you like, you can find us all the time on YouTube or on Twitter. We will probably be streaming to new places regularly as well. So shout out to my friends in Telegram and to Instagram. We're now live streaming. I just want to check. So we got 14 people on Instagram, and we have 97 people hanging out on the Telegram channel. We have, where else are we live here? We've got a whole bunch of people from 766 people on YouTube. I'm sorry, 800 people on YouTube. We have about 300 people on Twitter. So hope everyone is doing well. Let's jump into some ideas. Now that we've got the analysis, right? So inflation data, cool. That is going to lean more bearish for the US dollar, more bullish for metals. And remember, the tongue-in-cheek answer is that I gave you into this day is metals look bullish no matter what. Cool inflation, all right, great, rate cuts. Hot inflation, all right, stagflation. Both of those environments, to me, you stay bullish metals, okay? A lot of people are on the sidelines saying, please gold reverse, please pull back, please, sell off. I get it. But again, we have to look at the macro. And when you look at the macro, you realize that, again, it favors gold and silver heavily. Blunt says, Nick, I'm waiting for gold to pull back to 35.75 and I'll go into a long position. It's a fib retracement level and a market structure point. Blunt, thank you for the comment. I'm waiting for pullbacks too. Nick, we barely missed the stop loss on silver. Market opened and almost hit our stop loss. Still in the trade, hanging on for dear life here. I've got my trade here. You can see we did come back, test this area. Didn't quite get much of a response, or didn't get a full retest of this support level. And if we do roll over, if we come down and take that out, then it is what it is. We'll move on from the trade. But I'm very I don't know what the word is. I'm blanking for it. Ambivalent, agnostic. I don't really care where exactly metals go, because if they move higher, obviously I've got a silver trade on, so I'll continue to trail stops and let this winner run. But if it moves lower, I could reload and potentially get into gold as well as silver. And another side trade that I want to place, I know this is not a commodity, but the gold and silver miners, I want to load up on some gold and silver mining stocks if they give me a good pullback. They're very volatile. I'm talking specifically like GDX, right? This is an ETF that tracks gold miners. SIL is the global silver miners ETF. These things are very stretched to the upside. Doesn't mean they can't get more stretched, by the way. But to me, I would love to reload if we do get a metals market pullback. It would not be too upset about taking profits on the silver trade and potentially reloading for another trade. So again, metals are the spot to be for me right now. And trailing stops in case we do get some sort of sharp reversal. All right, so let's jump into some ideas. Before we do this, just a reminder, if you are watching the stream and you do not have access to the Edge Finder for our regular viewers, our sale is ending. We're doing 45% off the Edge Finder right now. You can get access to the tools that I'm using in my videos, live streams, etc., to scan markets and to study both the macro side of things, right? The economy. Globally, we have economic readings for the US, for the UK, Europe, Japan, China. We have all sorts of different data points within our software. And of course, also market screening tools that help us to track institutional data. So for example, if you want to track what institutions are buying and selling, hint, hint, gold and silver have been institutions' favorites. It's not coincidental, I think, that you had these monster moves in gold and silver. And at the same time, institutions have been pigpiling into the long side of this, right? Again, watch the institutional activity through the commitment of traders tools that we have, and watch the macro. These are the things. Everyone is so obsessed in the trading world about technical analysis, but you're missing the forest from the trees. That's the thing you've got to remember is if you want to see what big money is doing, there's ways to do it. You just have to have the tools in front of you. If you want to see where the economy is going and where the Fed is likely to go next, which is the biggest money printer on planet Earth, if you want to track those things and try and put your mind in the head of the Federal Reserve chair, You have to have tools to do that. So if you don't have access to the Edge Finder and you're interested in getting a copy, it's 45% off right now. We'll drop a link here in the live stream chat. If you are watching on YouTube, you can click that link, or you can head over to a1trading.com. This link will take you to a spot where you can send a direct message to our support team here at A1 Trading. We have a team of people behind this software. If you have questions about the product, if you want to take advantage of the 45% off discount, they can get you some information there. Or like I said, you can simply head over to a1trading.com/edgefinder to explore the product. There's also promotions available on our website that you can find there as well. So do not miss the opportunity because the sale is ending soon. It's our biggest discount that we offer. So don't miss it. Okay, so let's get into some markups. Back to the top setups page. What is the top setups page? So all this macro, all this, institutions are doing this, all this, stimulus is doing this, inflation's doing this, GDP, jobs data, all that stuff is great, but it needs to be actionable. That is something that is also very paralyzing about fundamental analysis. The criticism that many people have for fundamental analysis is that, like technical analysis, it can also be subjective. It can also be paralyzing. What I mean by that is paralysis by analysis, right? Where you're looking at so many things and you're getting so many conflicting views. We need something that's actionable. The top setups page, what it does is it looks at these indicators and it ranks and files with a simple scoring rubric. Which opportunities look better than others in terms of the data points that it's tracking, right? Is this a holy grail system that's going to tell you exactly when to buy and sell and you're going to make $1 billion? No, nothing can do that for you. I can't give that to you. I can't promise or guarantee that whatsoever. It's a scanning tool that I've had a lot of success with over the years because it is built around the system that I've been able to use to generate pretty consistent profits in the markets. What I always want to make sure that I do when I make that sort of claim is to show it to you. So here is my P&L on my main trading account that I've been trading publicly on YouTube since 2020. This account is up 275% since inception. I've traded this through multiple up and down markets, 2022, 2020, 2024. We had the August, crash in August, which was rough, very, very rough on the option side specifically. So if you're interested in getting access to the tool, again, like I said, don't miss it. And the important thing that I add in as a distinction is that it's backed by real results. I trade what I use here on the show, and I wouldn't sell it if I didn't believe in it. That's the point. All right, so let's get into it. I'm going to skip some of the minor currency pairs because we do have a lot of stuff to look at today. So gold, let's just, again, rapid fire on gold. We do see a little bit of softness on the data here. Gold is rough for me because, again, the only spot that starts to look attractive for gold pullback buys might be this 38.2% retracement. That is a move of $106 an ounce to the downside, right? That's a 3% move lower. It looks like a world of a distance away, but that would be the only spot where I can start to saying maybe some pullback buys on gold look okay. And even if I was to get long, this would be a sort of a defensive setup, right? So I'm looking for a pullback, but I need to be careful with this sizing, right? Because this is an aggressive entry. You're still talking about a move straight up. Pullback, yes. I think this is a lot better than buying it here or, chasing it yesterday, right? I think the setup here for gold, is it hard to be patient on these moves? Absolutely, right? Because it's moving every day. Feels like you're missing the move. For me, what looks right here is, okay, this is a corrective pullback that I think actually sets you up for a possible entry point where the risk looks attractive relative to the potential reward, right? So if we do see a push lower in gold, this setup looks good, right? I like this personally. Again, am I going to bet my whole account on this move? Absolutely not, right? I'm going to risk small, take a small slice on gold. And transparently, I actually like the pullback to this prior high more. So if we take a loss here, then my second attempt to get long gold would be around the 34.25 level. Guys, give me 1 second. I'm going to let my cat in because she's standing by the door and screaming. Here she is. Here's the culprit. You have anything to say? Sorry about that. Yeah, so I like the setup here for gold more so, to be honest. If you were to get a larger pullback to retest this broken consolidation, I just think you might not get that move. You might not see, again, anytime soon at least, you might not get to see 34.33. Can you believe that just over a year ago, we were looking at prices. Again, it's September. Let's go back September of 2024, right? September of 2024, we're at 2,600. We've gained $1,000 an ounce. If you went and bought a couple ounces of gold, right, like physical gold, you've done really, really well. Like gold has just been on a monster move higher. You got it, Belent. I am a cat dad. I've got two cats. One's a boy, one's a girl. The girl is more my companion, and the boy is more my wife's companion. And the big one, I call him the big one. His name is Blaze. He'll, if I'm not careful, he'll just come eat all of the little one, Luna's food. Nick is a cat person. I've become a cat person. I was never a cat person my whole life, but nobody's a cat person, I feel like, until you actually have a cat. Like I always thought, oh, cats are mean. And then I had a cat and I'm like, oh, they're actually really cool. They're super friendly. They're super chill. They just want to sit with you. Some cats are mean, but just, yeah. Okay, let's keep moving because we got a lot of stuff to look at. Again, gold is fun to look at. It's shiny physically, pun intended. But, right, we also know that it's not at a spot where, to me, it makes any sense to take a trade. You might have something on the lower time frames. If you're an hourly chart trader, maybe you've got a little support at 36.23. Maybe you can set up a trade. 4-hour chart, really, you don't get anything until you get down to like the that 35, 37 level, which we already discussed as a daily chart level as well. So I do like that for a pullback, but nothing setting up currently. The Australian dollar, let's also take a look at this one. This is another top setup within the Edge Finder. Let's do this here. Would love to see, as I just got done discussing, I did this a second ago, I'd like to see the Australian dollar here break this level of resistance. We are sitting at resistance. So the first natural response would be sellers probably want to come in and try this area. What I would say is if you're bullish, we want to see something like this today. Right? A solid candle close above this prior high. If that takes place, a retracement into this area looks like a buying the dip opportunity in my personal view. Again, not financial advice always. I'm just here sharing my thoughts and ideas in markets. So we've checked off the first two, gold and the Australian dollar both look bullish. We should go ahead and do silver just because we already did gold. So while we're in the headspace of metals, silver, I am already bullish. I mentioned I already have a trade open on SLV. Stops are trailed below this consolidation zone on the 4-hour chart. So I took this trade on the 4-hour chart, so I'm managing it on the 4-hour. Stops are below this level. If you break this area, I'm going to take profits on the move. This has been one of my better trades of the year. I only wish I had more size on it, right? That's what you always say when your trade has gone well. Silver, SLV, floating around $15,000 on this trade, which is phenomenal. I wish I had more like this. Again, not all my trades look like that. Some are great, some are not so great. I am looking for silver to, again, hold this consolidation zone and push higher. If we can get a move through these highs, that will be my cue to go ahead and trail this stop loss further. I am looking actively to do that. That is my checklist item each day, is to manage the silver trade. That is first and foremost on my watch list here, just with my system. Taking a look at dollar CAD, also getting a bullish reading. The Canadian dollar has been so weak. I don't know if you guys have been watching the CAD. Canadian dollar has been very, very weak. If you're bullish on the dollar, this would be the one. Like, I'm not really super bullish on the dollar, so I'd be cautious with this, but it could be a nice hedge to mix in if you have a bunch of dollar shorts. I like this idea, right? So watching for a breakthrough 1.3857. Let's see it. that would be a possible pullback and move higher. What's the lowest time frame you go to? Probably the 1 hour chart. I'm not a day trader. I'm a swing trader. I look for bigger moves based on macro. No shade to day traders. I personally think it is much easier to swing trade, and I know a lot of traders. I've had the honor and the pleasure of working with a lot of traders in my career, and again, day traders exist. Profitable day traders exist. I just know a lot more swing traders. Anecdotally, from my experience in the industry, I know a lot more profitable swing traders than day traders. Again, not saying you can't be a profitable day trader. I think it's just personally more people have more success with higher time frames than lower time frames. That's my opinion. If you disagree, all good. There's many different ways to do just fine in markets. There's a lot more ways to mess up markets bad. So whatever you do beyond time frame, more important than anything is having a statistical edge and having good sizing on your trades. That is ultimately the most important things. All right. Chinese stocks, really quick, just going to take a look, see what's going on overseas there in the Far East. What's going on with the Chinese stock market? We are still pushing higher. Stocks look really good over there. You do have a push through these highs. Again, I am a little hesitant on stocks or risk assets in general at this moment, but a pullback looks attractive here for possible continuations. If I was to trade an index on the long side, it would probably be the Chinese stock market, believe it or not. Pound dollar, if we were to look here at pound dollar still looks like we're consolidating here. I think the setup here that makes more sense would be a breakout, pullback, continuation. I know we're doing something unique. We're going through all the top setups and just marking through all of it. Kiwi dollar, same story as Aussie dollar. You've got this, well, actually, the charts have diverged, actually. Got this downward channel. Would love to see a break of structure here to the upside. That would be an attractive momentum push back higher. So I like this opportunity a little bit more. Watching to see if we can break through. So we'll see what happens with Kiwi dollar. And then DAX is getting a bearish reading. I'm just going to skip to this last one because we are running short on time. I mentioned yesterday, for me to get short on the DAX, it would have to be a break of structure. Like where we currently sit, I would not be surprised if buyers kind of held this level. For me to get short on the DAX, I would need to see failure at that critical level of support that we saw back in August. If you get that kind of move, there might be a short setup that makes logical sense. If you think Europe is slowing at all, that could be something to keep an eye on. If I take a look really quick at the EU economic heat map, European stocks are looking rough here, as you do have some stickiness in inflation data. You also have lackluster growth metrics. So yeah, I'm not a huge fan of bullishness on the DAX at this time. Earlier in the year, I really liked the DAX long. Now I'm a little bit more cautious. Edgefinder, like I said, it is 45% off right now, guys. If you do not have a copy of the tool and you would like access, here is your chance to pick it up for super sale discounts. We'll drop the link here in the chat to where you can speak directly to a member of our support team and get connected with them to ask about the live stream discount of 45% off that is available for only a couple more days before we discontinue that sale. Take advantage of it. Get 45% off. Before we move on here, if you're watching on Telegram or on Instagram, you can also just navigate to our website, a1trading.com, to explore promotional discounts that are available on the website at this time. Okay, guys, up next, we are going to be transitioning to our next show host. Stay tuned. We'll be right back just after this quick break. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Hello traders, how are we? Trader Tom here from Simply Forex, and I'm with you for the next 30 minutes. Before we look at the charts, guys, just to let you know, I'm a technical trader. So if you want me to look at any asset, any currency pair, any metals, any indices from a technical point of view, just leave a comment and I will take a look at them. And I just wanted to carry on a point that Nick made with regards to, what's the lowest time frame you will trade, right? And I totally agree. New traders, what everyone does when they first start trading is they think, if I am in the market, the more I'm in the market, the more money I can make. So that means you trade lower time frames, right? Like me, I started on the 15-minute chart, right? And basically you get more and more trades. You have 5, 6, 7 trades a day or whatever it is, and you think that will help you to make more money. As your ass gets kicked regularly on those lower time frames, you gradually move to the higher time frames, right? So why do you move to the higher time frames? Because they are more reliable, right? If you look at daily trend, okay, let's do that. Let's look at daily trend. Okay, let's come back here. It takes a lot to break daily trend, right? Let's say we get a structure break here. You can see this pound yen, I just picked any currency pair, right, was in an uptrend, I would say till here. So from the 23rd of April to the 1st of August, we were in an uptrend. So that trend is very reliable, right? If you look on the 15-minute chart, the trend is very unreliable, right? You're going to have a trend break within hours, right? So there's more consistency and reliability in trading higher time frames. Also, if you have a 15-minute support zone, that's going to get broke like that. Whereas if you have a daily level, price will constantly respect it. I mean, just look at this daily resistance level here, right? It keeps being respected. And it's been respected from here, which is the 9th of July, up until the 8th of September, right? There's no 15-minute resistance level that's going to be respected that much. So, yes, that is why I trade the higher time frames also. Typically, guys, I'm looking at weekly and daily. Sorry, guys, I'm just finding your questions. I'm looking at weekly and daily for direction, and then I'm entering on the H4, right? So, yeah, I just wanted to chirp in with my couple of pence on that matter. Also, guys, let me show you a trade that I've literally just got into. Yeah, these are not, trades after the fact. This is a live trade that I've just got into right now, and it's a pound yen sell trade. So let's start by understanding this, and then I'll take as many of your questions as possible, guys, all right, in the time that I have. And I hope you're all having a lovely trading week. So this weekly resistance level, right, keeps holding. It is good resistance, okay? And then if we look at the weekly candle, you can see we had a big rejection wick at this level, and it's not the first time we've had rejection at this level, okay? It's a good level to sell from. Now, if we drop down to the daily chart, you can see, guys, that price has come back up, and we find ourselves in, kind of a bit of a range, right? This level didn't break. All of these wicks keep closing back inside it, right? So we're kind of between here and here. So bearing in mind that that is a very strong weekly level, and we're starting to see selling. Well, actually, guys, I'll explain more on the H4. We are starting to see selling candles, but these are not exactly super bearish, right? Let's be honest. But the final piece of the jigsaw, right, was the H4, okay? So if we drop down to the H4 now, you can see the trade I just entered there. Basically, once we got up to this level, we've tested it, but we're still in a H4 uptrend, still in a H4 uptrend. still in a H4 uptrend, but finally we get a break of structure, right? So we're starting to get lower highs, potentially here, and we're starting to get lower lows. So not only have we hit a key resistance level, we've also started to have H4 structure breakdown as well. And I basically entered here, guys, right? I started to see these top wicks appear, close back within one another. I started selling here, stop loss above here, and this will be my first target. So typically, once I get 1:1, I am going to take some profit off the trade, right? I'll take anywhere from like 50% up to 90%. And then I'll let some profit run, potentially, right, all the way back down to this area here. So there you go, guys. That is a live trade I have just gotten into pound yen sells. And it also come off the back of that terrible PPI data, right? So if I'm in a yen trade, I always take a look at the indices, right? Because yen is a flight to safety. And, you know, that PPI data that just come out, you know, is it going to have a negative impact on the indices? We shall see. So far, not overly, right? But I will keep an eye on the indices when I am trading yen. So there you go, guys. I just wanted to share the trade that I am in. Let's take a look at a few questions now. So we've got a few people wanting to look at oil. We've got oil, gold, NASDAQ. Let's go through all of them, right? Let's look at oil. This is actually a trade idea for me today if we break this level, right? So let me explain how I get to this level, right? Again, I do a top-down approach. So I actually start with the daily, right? And as you can see, daily was in an uptrend, but then bang, we broke. We're now in a downtrend, right? We broke these lows. We're getting lower lows. Okay, we're now in a downtrend. And you can see, I love this setup, guys. This happens time and time and time again. But what was once support, right? When it breaks and retests it, it becomes very good resistance, right? And you can see the wick rejections we're getting at that level, all right? So daily tells me I can sell. And all I would look to do is take it back down to these lows, right? First of all. And then basically, if I get a qualified trade on the daily for the reasons I just explained, I'll take a look at the weekly, right? And I'll be looking at the weekly to see if it, just basically to see if it doesn't contradict my idea, right? So as you can see, we were in a weekly uptrend, and now we are in a weekly downtrend. We're getting lower highs, right? Lower lows. And also, guys, right? Again, what was once support becomes good resistance. My God, if you only traded one setup for the rest of your trading career, it should be that, right? When support breaks, it becomes very good resistance, and vice versa. Resistance breaks, it becomes very good support. Trade that setup. It's a wonderful bloody setup, right? But not only that, we've had a very large bearish weekly candle. So weekly and daily, right, at the start of the day, tell me I can sell oil. This is West Texan, spot crude, but, you know, it's the same for Brent, really, guys, right? So I just put this on my little sheet. I put it on my channel. I'll give you these trades every day, right? So sell trade. So it's one thing knowing direction. It's another thing finding an entry. Okay. And again, I'm going to show you exactly what I do. So my entry time frame is typically the H4, right? And as you can see, right, we are in a H4 downtrend. but price has come up and we've started to see these higher lows, right? Which doesn't fill me with confidence for selling. So all I'm looking for is a break of this low. Hence my alarm is in here. Once we get that, or if we get that, if we get something that looks like this and we break that level, right, I will be looking to sell. Okay, stops above here, look to take price back down to these lows. So oil is a sell trade for me, but I want to see lower time frame structure break down. There's no better indicator than structure breaks, right? So it'll be really interesting to see what price with oil does at this level. If it starts breaking it, well, I'm not interested. I'm no longer interested in selling this. But if this level holds and we get a breakdown in structure, I'm very much interested. So lots of things have to happen for me. Not lots of things, it's just simple price action. But I want to see these things happen for me to take a trade, because if these things happen, there's lots of confluence in that trade, right? And that increases the probability. So oil, I am looking to sell. Gold. Everyone likes a bit of gold. You are gold. It's an old UK song. I promise not to sing again. Right. Now, this is overextended, right? Now, I want to be with trend, but there is a but. Okay. Now, as you can see, right, we were kind of here and then bang. We are clearly in an uptrend. Okay. Now, gold has broken some correlations here as well, because we've had a bit of strength in the indices. You know, gold's a flight to safety, but gold just keeps flying. It's, you know, mainly because of, you know, a lot of US dollar weakness, but you've got central banks buying up gold. You know, everyone seems to want to buy gold at the moment, hence the price. But right now, there is no value in buying gold. I don't want to buy gold in here. I want to buy gold in here. Now, bearing that in mind, could we trade against trend? Now, typically, I don't want to do that. But if we start seeing big bearish daily candles like this, okay, yesterday's candle is a nice big bearish candle, and we get a H4 level that breaks. You can clearly see we've got this last H4 low. So if we get a big bearish daily candle and a structure break, looks something like this, then potentially we can trade the retrace, right? Look to come lower, stops above here. But if we go back to the day chart, you know, ultimately, I don't want to do that, because I look at 28 currency pairs, I look at oil, I look at indices, I look at metals. You know, I can find a trade where I am with trend. So why pick a pair that I'm not with trend, right? Or gold in this case. But I am definitely not interested in buying gold, especially after this big bearish daily candle. If anything, if you said, Tom, you have to trade gold, I would look to sell it. But ultimately, I want to buy gold, right? But I want to buy it from an area of value, right? Down here, there's value. Yeah. And again, we spoke about this setup before. What was once resistance, right? When it breaks and it retests, it becomes very good support. And this could be a very good area for buying. So gold for me at the moment is stay away. If I had to trade it, I would trade the retrace, but I don't have to trade it. There is no gun to my head, right? I don't have to do that. And I advise against having a gun against your head while you trade. Don't do that. So we looked at gold, we looked at oil. Meech wants to look at the NASDAQ. And again, guys, let's start with the daily. Now, the thing with the daily, okay, is this, right? Let's just look at the facts of the chart. right? I'm not going to give you any opinion. I'm just going to show you facts on a chart, right? And we're just going to plot structure, right? Now, this is where we're at. Okay, so we're in an uptrend. We broke this high. We are getting higher highs. Okay, so I want to look for buys. Again, I want to be with trend. But there's a big but, right? There is the last high. Okay, we don't know what price is going to do today at this high, right? Will this level hold, right? Will we get a bearish wick, something like this? Will this level hold? So I'm not interested in buying it, although we are in an uptrend, right? And I'm really intrigued to see what price does at these last highs. And these last highs are weekly highs, right? And these are all-time highs. Now, you can see we had a bit of a sell-off last time at this level, right? Now, can we expect the same? Let's see. I'll be looking for bearish candles at this level. But I don't want to keep buying the NASDAQ, right? There's clearly resistance here. Things are a little bit overextended, right? This is our smart river, right? And if price is far away from that level, things are just overextended. Then there's no value there. It's similar to gold, right? There's no value. So again, the NASDAQ is a stay out for me. If price, retraces, okay, let's say we get a nice bullish candle today that breaks that level, right? And then we get a nice retrace. There's a bit of a level there or even here. And we get a retrace into here. I'm interested, right? I would look to buy the NASDAQ. But they're all a bit will they, won't they, aren't they, really, with the weekly chart? Will they break the high or won't they? Let's have a look at the Dow Jones as well. Will it break this high or won't it? We've already had a big reaction. Again, S&P, right? Okay, this seems to be flying, right? So if we keep breaking all those weekly highs, then yeah, bullish the indices, guys, really, from a technical standpoint. Although all the, like I say, I'm a technical trader, but I keep it, obviously keep it up to date with the news and what's going on. There's so much bad data coming out of the US. We had terrible NFPs, terrible employment data. We've had terrible PPI data, but the indices just keep going tick, tick, tick. How long can that, that break in correlation keep going? Right, we shall see. Right, what else are we looking at? So Jasley FX wants to look at pound US dollar. So Nero wants to look at pound US dollar. So does Jasley. Jasley or Yasley? Jasley. Let's have a look at pound US dollar. Pound US dollar is a bit of a mess. And guys, before I look at pound US dollar, please don't forget to, if you enjoy my analysis, please don't forget to subscribe to my channel, Simply Forex, and you can see my ugly face every day. I apologize for that, but we also do some technical analysis like we're doing today, and we do this pretty much every day, guys. Right, top-down approach. Okay, now weekly. Right, again, let's just look at the facts. Right, bang, we are in a downtrend. Right, weekly is in a downtrend. We broke these lows here, got lower lows. We're in a downtrend. Now, price has retraced and we've got this level of resistance here. Right, it's more of a daily level, and we'll take a look at it. But weekly, we're in a downtrend. But do you want to sell those candles? No. They are very bullish. Look at those bottom wicks, right? I do not want to sell those candles. So weeklies are a bit of a stalemate, right? We're in an uptrend. We're in a downtrend, but we've got these bullish weekly candles, right? There's contradiction. I don't trade contradiction. I want everything pulling in the same direction, right? But let's get more information. Let's have a look at the day chart now. Now, if I said to you what's trend on the day chart, it's a little bit of a mess, right? But we was in this downtrend, right? Price shot back up. We're still in a downtrend because we haven't broken these highs. And then price has just kind of been a bit scruffy ever since. Okay. Now, based on us being in a weekly downtrend, right? I would be interested in taking sells from here, right? Potentially all the way back down to these lows, right? But, okay, sorry guys, I want to keep all your questions so I can see them, right? But the daily time frame's not that clear, right? This low never broke, right? So we find ourselves really in a little bit of a range, right, between here and here. So weekly downtrend, we're at the top of a daily range. Then yeah, I think we can look for sells for pound US dollar. The only problem with that is it goes against a lot of what I'm seeing on other US dollar pairs, right? And that's an important point, guys, right? When you look at the US dollar, you want to look at it as a whole. So you can look at the dollar index for that, obviously, the DXY, right? And you can get an understanding of the dollar there. But you also want to see the US dollar against all of the majors, against euro, Swiss franc, yen, pound, Aussie dollar, right? And again, if you get contradiction there, that's not what you want. But pound US dollar on its own, I think this looks like a sell trade. So what I would look for, right, I would look to take price potentially back down to here, this level, right? But I need a H4 structure break, okay? So you can see here, we are clearly in a H4 uptrend, right? Clearly, we found a bit of support here, but ultimately, if we get, a break of those lows, I think potentially we do have a good pound US dollar trade, sell trade back down to this level, right? And this candle's interesting, right? It's rejecting these highs in here. But now if I look at euro US dollar, it's a slightly different picture. And this is what I mean about looking at US dollar pairs as a whole. Because here, guys, right, on the weekly, we are still firmly in an uptrend, right? We're in an uptrend. There's no two ways about it. And we're getting bullish candles. Look at those wicks, right? But the problem here is we have nowhere to go. We are at weekly resistance, right? So the dollar's difficult at the moment. So I would want to buy, okay, because of the candles, because of the uptrend, but I don't want to buy into resistance. Now, if we drop down to the day chart, daily is firmly in an uptrend as well, right? We found ourselves in a little bit of a range, right? And then we broke it, right? We broke all these highs in here. This candle right here, the body of the candle broke all of these highs. We're in an uptrend, and I was thinking we have a little bit more room to go into before we hit this 118,000 psychological level. But I'm not liking this big bearish daily candle, right? That tells me sellers have taken control. So more contradiction with the dollar, okay? Potentially, do we have a bit of room to come back up to here? Maybe, but, do I want to keep pushing into that level? Not really, right? I want nice free air for me to trade into. Yeah, and you can see that that is clearly previous resistance. So dollar's really difficult at the moment. So what we should do is take a quick look at the dollar index, see what that is telling us. Okay, so a range, right? And we've held on to the range. So on the daily, right? And this is what we were seeing on Euro US dollar, right? On the daily, I would say we have held on to that range and we are still in this range. Okay, we're still in this range. So can US dollar make it back up to the highs? So daily is suggesting a little bit of US dollar strength, right? We've also seen a nice big bullish candle. But let's take a look at the weekly now as well. But the weekly just looks bearish, right? This is the problem we're having with the dollar, right? If we look at the weekly, right, this is where we're at. We're clearly in a downtrend, right? Lower highs, lower lows. And again, just look at all those top wicks. Those are bearish candles, right? All these top wicks in here telling us sellers just keep pushing this back down. So can we come back down to these lows? On the weekly, I would say yes, we can. On the daily, right, as we just looked at, it's a different ball game, right? It's holding on to these lows. My God, that line was terrible. Forgive me, I've been drinking as usual. So, you know, it's just an unclear picture with US dollar across a lot of the US dollar majors at the moment, guys. Right, we've got 2 minutes. Let's take a look at one more. Right, we've looked at gold, guys. I keep getting these pop-ups. Right, let's have a look at US dollar Japanese yen. US dollar yen, if I even look at the chart, it's just the same, right? It's all about the range. Yeah, it's, you know, the dollar index is in a range. The yen is in a range. US dollar yen's in a range. Euro US dollar was in a range. Now, again, if you're looking at the range, we are at the bottom of the range and we had a nice big bullish candle. That suggests we can take price to the top of the range, right? It's difficult to argue with that, okay? That would make sense. But if we look at the weekly, we're at a resistance level and there's just loads of big bearish wicks. So for me, guys, I'm, you know, the US dollar is not the one to trade for me at the moment. There's so many other currency pairs you can look at that will give you better setups at the moment, right? This euro weakness at the moment is an interesting trade, right? But having said that, if we look at the day chart, right, just to give you an understanding of how I would trade this, if I did want to buy this back up to here, right, what I would do would be look for H4 structure break. So as you can see, we are still firmly in a H4 downtrend, right? Clearly lower lows, lower highs, potentially here. Yeah, but if we wanted to buy it, I would wait for a break of this level. If it happened, that would make more sense for me to take price back up to here. Okay, now if price starts breaking, you know, below this low, there's a strong probability it's going to come back down to this level. Yeah, so there you go, guys. Guys, I'd like to thank you for your time. Thank you for all your questions. Please don't forget to subscribe to my channel, Simply Forex. Go check it out. We would love to have you. Thanks for having me on, guys. I'll see you again soon.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hello. How's everyone doing? Hold on, I'm just going to switch monitors out. So I've just realized this one's a bit too wide. Just bear with me for 1 second. Hope everyone's well. Hold on, boomer technophobes here. There we go. That should look a little bit better. How's everyone doing? Hope you're all having a good week. It's hump day. We're halfway through, only a couple more days, and it's the weekend, and we can relax a bit. So hopefully you can't hear music in the background. I do have some music playing, so if you can, let me know and I'll turn it off. Can I check silver? I suppose I could check silver for you. Yeah, no problem. Tell you what, let me go through my watch list and then we'll go on to some requests. So CAD Swiss, I think CAD Swiss is a beautiful pick right now. So I put out a YouTube video last week, basically just going over what's going on with the Canadian dollar or the Canadian economy. It's in a bit of a rough patch. I'm not going to go into the whole thing. As I said, I've already spoken about it, made content on it, but the current account deficit is pretty tragic right now. Their unemployment is rising very gradually, but is showing no signs of slowing down. Bank of Canada is dovish. So overall, Canadian dollar, easy peasy shorting opportunities, in my personal opinion, not financial advice. So I'm just waiting for opportunities to get in. So CAD Swiss, we have broken this level of support that's been in place since July 2025, so only a few months ago. Finally broke, and it seems like on a fundamental view, we very easily could come down to this low at 0.54 that was established. Hold on, I'll go to the daily time frame. Here, that was established all the way back in 2015, this low right here. So I'm being a little bit, depends how you see it, pessimistic, optimistic that we could get there, but it doesn't matter until I can get into the trade. So I'm looking for a retest of this support. I'm looking for this 50% level to get hit. So obviously if we draw the fib from high to low, this support level is 50% on the fib perfectly. So it's like a French kiss or a chef's kiss or whatever you call it. Not French kiss, I think that's the wrong one. The Aussie CAD, again, you'll see a theme throughout my trading today. The Canadian dollar is in my sniper scope. So I'm not in anything from the Canadian dollar yet. I'll show you some open positions soon. But Aussie CAD, the Australian dollar, sorry, not the Australian dollar, the RBA, so the Central Bank for Australia, are currently quite hawkish, actually. Obviously, we've got the Bank of Canada, currently dovish. So overall, we've got a really, really nice central bank divergence there. Euro dollar, I don't like euro dollar right now. I've got no opinion. I think we could see higher prices, but I think it's going to be a grind. I just don't see huge opportunities right now. I think 1.2 is definitely still a longer term target or a medium term target. But yeah, in terms of actually taking the trade, I don't really have much interest, but I like to keep an eye on it. Dollar Swiss should be a no-brainer for quite a few of you. Investing with Ian, hello. Can you also look at pound CAD? Yeah, pound CAD's also in the sniper scopes. Flex Baylor, hello, good to see you. So the dollar Swiss, you'll notice Canadian dollar and the US dollar are in the scopes for shorts. Pretty much everything else is either neutral or bullish in my case or in my view. So I'm looking for fresh lows or recent fresh lows on the dollar Swiss. I'm just waiting for some sort of confirmation to get in. We do have this really, really nice downtrend or channel, whatever you want to call it. We did break it, and it seems like we tried to break back in, failed, showing that we do have some sellers back in control. So yeah, I'm just waiting. I don't want to be too hasty with dollar Swiss just yet. CAD yen, again, same thing with the Canadian dollar. We've already mentioned this. And then we've obviously got the Bank of Japan that might be hiking rates. It seems like they're quite cautious, but that possibility is there. So I think CAD yen is definitely on the table for potential shorts. Swiss yen, nothing here right now. Similar to euro dollar, I'm more just watching it. It's not something that I'm really interested in placing any positions on just yet. Dollar yen could be a perfect one. I'll leave this one to you to figure out why I've mentioned individual, the dollar and the yen. So you should be able to get that one. And the requested pound CAD. So pound CAD, I think, is again easy short CAD, pretty simple long on the pound. I don't like the pound. I think that there are massive problems within the UK. However, they're not reflected in the markets, at least yet. We do have some stagflation concerns. It seems like the Bank of England's pretty neutral. I mean, slightly dovish, but not to the extent of the Bank of Canada. So I was already looking at this one. So I do have targets pretty much just coming into this recent high and then slightly beyond at round numbers. Nothing overly complex, but in terms of actually getting in, there is nothing here until we see some sort of pullback. So for me to take this trade, I cannot really justify getting in if something like this happens, just because the R&R on that's not really worth it in my view. And that's just my personal trading. So the only way I could really take this is if we see a correction of this left side H4 candle, see price pull in, oops, sorry, I got the magnet on there. See price pull into the 200 moving average or something like this, and that would be a double whammy to then potentially take a long position. Again, I keep my trading very, very simple on a technical side. Silver, still someone in the chat requesting silver. I would love to be a buyer of silver, but I just can't find an entry. I've been waiting for silver for a long time, and I'm actually very, very salty. So I was in silver longs back at the start of the year, actually. I can't remember exactly where it was. It was fairly sure I was in longs here. So I was buying this rally to the upside at the time. Then we saw this, and I was like, "Oh my god!" I was pretty highly leveraged in the position. I'll be honest; it was a big one, but obviously relative to the account size. So I was like, I can't justify the open risk that I have on this. So I had to cut the trades, and it was a bit of a sting, nothing too major. And then we saw this, and I was just so upset. Not upset, like upset. It's just one of those things in trading. When you get bitten in the markets, it can be a bit of a stinging bite. So that's that. But yeah, in terms of targets, I've been targeting 44. Sorry, no, I was wrong. I was targeting 40 pretty much all year. We finally reached 40. So now the next targets you can see here, UBS for the second quarter of 2025. Oh, sorry, misspeaking. The fourth quarter of 2025 is at $42. Seems like we're going to get there within the next 1 to 2 weeks. I would say maybe this week. And then we do have the second quarter of 2026 targets again by UBS at 44. So that's that. Copper, I've got no interest in actually trading copper, but I really find the chart interesting because it's a unique one. We've got a really, really nice support down here at 4, round number 4. So I think, to be honest, I actually might take a trade to the long side on copper if we can come down to this level. Purely speculative, no, it would just be a little bit of a punt to see what happens. If that doesn't happen, fine, I'm not going to take this trade. I think and I can't explain this in professional terms, so please excuse me, but in my gut, this feels wrong. I don't have a rule or anything to say why, but this just feels like a trap to be buying into copper right now. I'm sure some of you might agree, especially people that have been in the markets for a little while. This just seems too obvious to buy. It seems like drop, accumulation, drop further, rather than it being a drop and then reversal. So I'm just, I'm staying away from copper for now. Nat gas. I would like to be a buyer in Nat gas at some point. There's targets up here by UBS for March 2026 at 3.8. We've got a December 2025 target by UBS at 4.1. So just to explain that, because I showed this to someone the other day and they're like, well, how can you have December high? I was like, it's actually very simple. It's just, they're expecting price to come up and then come back down for March. So I'm keeping an eye on that, but again, nat gas isn't something that I pay any attention to really. However, with commodities like gold, silver, nat gas, copper, there is a point where the risk of being a buyer does make sense, because now this is going to sound a little bit rough around the edges, you might say, but the commodities generally do hold value and increase in value. So copper, nat gas, gold, silver, etc., etc. If you obviously, and this isn't financial advice, this is just a very rough thought process. If you hold them long enough, it should work out. Do you get what I'm saying? Again, I couldn't think of a way to put that into professional wording, but hopefully you get the idea. Now, the China 50, I've never, ever placed a trade on China 50, but I saw it on the Edge Finder. And I was thinking, I've never traded this asset before. Let me take a look. let's just see what's going on with the price action. So we do have a bullish score of 8, which is a really nice signal to be a buyer. We do also have some stimulus that's going on in China. Again, I've not looked into that fully, but I am aware that there's something going on that side of things. So it'd be very, very simple to see a pullback into the fib. Oh, wait, hold on. Sorry, I'm on the wrong chart. Just give me a second. Let me put this back to the daily. I need the H4 back. There we go. So a pullback into the fib, so 50% or 618, doesn't matter, either one or in between is fine as well. That would also give price a chance to sort of reclaim this 200 moving average. And just like we saw, was it silver? I can't remember. We looked at something else just earlier where we saw a similar thing where we're looking for a pullback into the fib, also lining up with the moving average, and then we could look for a long position. But as I said, I've never traded this asset, so I'm not too familiar with its behavior or really anything else to do with it. But the trend looks promising. The edge finder looks good. The technicals are okay. So I just need to do a bit more research before I jump into that or really do anything else. So I've got a couple of open positions. I've actually moved to TradingView. So I've got, some intraday positions. They're not really swing trades. These were taken on sort of the 15-minute and the H1 timeframes this morning from my Discord. So jumped into an Aussie US dollar. As I've already mentioned, we do have a hawkish RBA, and we've got the Fed that is highly, highly expected to cut in the coming meeting. Whether that's 50 basis point cut or 25, I mean, I wouldn't expect 50. I wouldn't be hugely surprised. It would be more like they cut 50, not like oh my God, they just cut 50, the world's ending. But again, I would say it's going to be a 25 basis point cut. We did have the NFP revision thing yesterday. I can't remember exactly what it was called. I'll be honest, but that actually came out quite positive for the dollar. But it seems it's not really swung. It's not really swung the trend or done much. But it was a little bit of a revision to the upside in terms of the labor market. But again, I'm not going to really account for that too much. So the Aussie dollar had a couple of different factors. Obviously, the fundamental view. I'm fairly sure it's on the edge finder. Yes, we do have the Aussie dollar on the edge finder here. So, but a very bullish score at +9. We've got, again, the central banks. We've got the edge finder. We had a really nice 50% pullback on this fib. At the time, I actually entered on this candle right here. I'm not sure if you guys can see it. I might be too faint. But yeah, this was a really nice rejection off the 50 moving average and the fib level. So I was like, you know what? Lines up with fundamentals, lines up with the technical strategy. Let's jump in. So that's that. Very, very easy, straightforwards. Very small position sizes, by the way. Then we've got the Nikkei. So the Nikkei was one I was contemplating whether to trade or not, because we did have the Japanese PM step away. Was it the 7th of September? Guys, I'm really sorry. I've completely ignored the chat on this stream. I will get back to you. I've got 15 minutes. Let me just run through these. I'll read what you've been saying. I'll try my best to reply. So the Nikkei, exactly the same setup. Again, this was taken on the 15. The Aussie dollar presented itself at exactly the same time. So you know what? I'm going to jump into both. So 50% pullback here, still respected the 50 moving average. The fundamental view is not super clear, but the trend is bullish. Again, we do have the PM that stepped down, did hit the yen slightly. Generally speaking, and this is a very, very loose general rule, please do not apply this to trading without educating yourself on the exact situation you're trading in. But situations that affect currencies can actually have the opposite effect on the indices. So someone's laughing at the way I say Nikkei. You know what? Fine. I'll leave it at the JPN 225. What was I saying? Oh, you've lost me. See, this is why I don't read the chat sometimes, because I've completely lost the trail of thought. Anyway, there's a couple of different reasons that are backing up this idea. So far, so good. I'm really happy with the trade. Very, very simple take profit level at a round number of 44,700. So yeah, there's not really much else to say on that one. Now, this is the troublemaker, the DAX, and this was a purely speculative position, or is that the right word? Obviously speculative. A purely contrarian position is the word. So it's funny, I saw Nick earlier on this stream talking about the DAX and saying he's waiting to short. And I was like, oh no, I'm in a long. Anyway, the only reason I took this trade was because of the put to call ratio. It was a very smaller size, so I'm not really too bothered if it does hit stops. Extreme fear, obviously we use the put to call ratio in basically the same way we use the retail sentiment. We just counter trade it. So the view I had here was, yes, it's against my overall strategy. There's no fib. The trend is bearish, but I'm going to take a stab and just see if we can get something, because we had a really nice trend here. And again, it was a little bit a little bit contrarian, but I was also counter trading the masses, or the put to call ratio. If we did see something like this and I didn't take it, I would have been really annoyed with myself. So it's one of those trades where it was worth me putting some money on the line, seeing if it worked. If it didn't, cool, it is what it is. In this case, clearly not worked. And a little plug for the Edge Finder, which does have a discount on at the moment of 45%. Use code ELITE, by the way, it does help me out. The DAX is bearish. So there you go. James versus Edge Finder. James loses. 1 point to Edge Finder. There you go. Beyond that, I do have a position on gold that did actually take a hit, although it's back to break even now. So the thing with gold is purely just trend following. I mean, excuse me, I need to take a drink. Got dry mouth. The trend was not allowing me to get in for a swing trade. So I decided, rather than just sitting on the sidelines, I'm going to go to a smaller time frame and see if I can find anything here. Now, this is more just expecting gold to break out and continue higher. Again, it's a little bit of a looser trade in terms of the criteria I had to get in. So it's a bit of a small, you can see it's only 0.01. It's a very small position because in an ideal world, this does get stopped out. And I would be actually quite happy if that did happen, because that means I could have a larger position at a better price. So something like this actually would be perfect. But again, just dipping my toes in gold, seeing what happens. If it doesn't work, again, it doesn't work, and that's that. Okay, so dollar seems to be down. Let me just read the chat. Let's see what's going on. Have I missed anything important? I feel like a speed run through that. Someone says they full ported or went full margin gold shorts. That is a really good idea. I fully back that. Of course, I'm joking. I would never support something like that. People are asking for Bitcoin. Now, I say the same thing every time someone asks me to go over a crypto currency. I don't trade them. So my analysis will be very rough. It'll just be technical. So don't take it too seriously in terms of don't place any trades based on what I'm saying about Bitcoin. So just from a technical view, looks quite good to be a buyer, to be honest with you. I don't see anything on the Edge Finder actually for any position. It seems neutral. So yeah, I'm not seeing really anything to back up a long position other than just price action here. So if we could see these moving averages cross, just indicating a trend change, I'd be looking for some sort of pullback here, and then a long position back into possibly the sort of 120. Well, yeah, I'd say 120 back up into the all-time highs. That sort of region, I think, would be a reasonable idea. Cool. Is there anything else? What's UBS website? Just type in UBS on Google. I'm sure it'll come up. Hi, James. Nikkei pronounced Nikkei. It's pronounced, however, I pronounce it Lee. Thank you very much. God, unbelievable. I have 0 eyelashes. All gone due to stress. Wait, hold on. All gone due to seeing red on blue light screen. That's unfortunate. You need to get some, what's it called? What's the thing that was going viral a few years ago for growing hair back? Oh God, I can't remember what it's called. Rosemary oil or whatever. Doesn't work, by the way. I tried it. Okay, right. Let's see. Is there anything I've not covered? Let's have a quick Edge Finder review. Aussie CAD. Again, I've already covered Aussie CAD. It's my #1 trade idea right now, but I can't get in. There is nowhere for me to place a trade. Pound CAD also, I do quite like it. Although I'm a bit of a hater on the pound, I would be willing to hold some sterling in the portfolio for a little bit. See the economic heat maps. Sorry, the economic surprise meter. US dollar's gone down to 20. Big drop. The US dollar was not that bad. I think it was, what, 45 roughly a couple of days ago. Now it's dropped all the way down to 20. Very, very sad for the dollar bulls. Pound, 86%. Yeah, I mean, it's exactly what I said earlier about the US dollar and the CAD being very clearly short ideas here. I mean, the Edge Finder's saying it very clearly as well, with the dollar having 20% and the CAD having 25%. Everything else is relatively neutral. Swiss not doing great at 17% actually as well. Although I don't really like to trade the Swiss. I'll stay away from the Swiss as much as possible, just because of its safe haven appeal. It's something that I would really rather stay away from. It's a very stable currency, generally speaking. Cotton institution on top setup. Do you mean this? Sentiment only? Get rid of neutral. So these are, actually, let's get rid of, I'll tell you what, I'll show you just the very bullish and bearish. There you go. Hey, James, I know you don't do stocks really, but could you look at Oracle? You know, I got a notification this morning from Interactive Brokers saying Oracle rocketed 30% or something. Yeah, here you go. I'm not sure why this happened. Is there a reason? I've got no idea. I couldn't tell you for the life of me. That's incredible. That's like a 40% move on Oracle. Anyone that does hold Oracle will be very, very happy today. But yeah, I mean, I don't really know what to say here. Slightly better earnings, slightly better, and it runs 40%. Not enough to justify the move. Yeah, I mean, if it's only slightly, then I would agree. So in terms of actually trading Oracle, I mean, again, please don't take this literally. I don't trade stocks. I'm just going for price action here. But I would just be looking for a very simple pullback. So it'd be, you know, sort of what we've seen here, up, down. Obviously, we've spiked here. So I'd be looking for some sort of correction, gap fill here, pull into 200 moving average, then continue higher. Very, very basic. But again, I'm not a stock guy. I can't really give you too much on a more advanced view, unfortunately. Ryman says US dollar CAD. You've picked the two worst currencies right now, to be honest with you. So yeah, I mean, I don't see anything on dollar CAD in terms of a technical setup or a fundamental idea, because it's just sideways here. There is nothing, there's no trend, there's no fundamentals, there's really nothing to drive this market in my view. Or, sorry, there's not enough to warrant a trade in my view, I should say. AI cloud solutions. Don't short Oracle. yeah. After that market open, I wouldn't be shorting Oracle. Absolutely. Big contracts with top AI company. Okay, that would make more sense than a slightly better earnings. The jump is about future forecast. Right, I see. Okay, so people are pricing in a deal with AI companies or contracts with AI companies. Is that the situation? The AI hype's getting tiresome. You know what it is everything is getting AI integration. Sometimes it's really good. Sometimes it's completely unneeded. But the thing is, I've got a friend who does mergers and acquisitions and all sorts of different things. I was talking to him about business ideas. I spoke to Nick about it as well. Another point. I was like, how are unicorns built? Not like, I'm not talking about like Meta and like the real unicorns. I mean, in like someone sat in the bedroom or in an office or whatever it may be, and they want to build a multi, or let's say hundreds of $1 million company, a company worth hundreds of millions. There we go. How is that really done? And he's like, well, it's all done, obviously through cash flow, investors, etc., etc. So anyway, what I'm trying to get to is the big theme with investors at the minute is AI. If you look at like Y Combinator, who doing a lot of investments, a large portion of what they do at the minute is investing in AI startups, things with AI integration, blah, blah, blah. And it's like the fast track to becoming a millionaire is just doing something in AI. It's crazy. Even if the product is useless, people will use it. It's like I saw a calorie tracking app the other day. You take a picture of your food and it tells you the calories. I was like, it's physically impossible for that to actually work. It won't be able to see the oil, the butter, the seasonings, anything else that you've put inside the food. But it's gone viral. It's insane. People are stupid. Anyway, sorry, I'm going off on a bit of a tangent there. Feels like a lot of products add AI for the sake of saying it's AI integrated. Well, yeah, there's that, but there's also the pressure of, as I said, investors and is it the board? Is that the right way of saying it? Like the old people that see AI and think it's the next, it's the whatever. Anyway, losing steam on my own conversation. We do have Marco coming up in a minute, so I'm going to start wrapping up here. If there's any last minute questions, let me know. Check Adobe for tomorrow. What is Adobe's ticker? Is it? No, that can't be it. Hold on, I'll just type it in. There you go. Oh, it's ADBE. Of course it's that. I mean, again, just from a technical view, this seems like a pretty easy short, to be honest. I could be completely wrong. I don't know what's going on with the stock, don't have the earnings, blah, blah, blah. So again, don't take it literally. But to be quite honest, again, purely from technicals, this looks like a pretty standard short. Just wait for a pullback in a downtrend. I don't really see another, I don't see any other opportunity. The app said the large slice of pie I had yesterday was 50 calories. Must be true. Well, there you go. You could be tracking calories religiously with this app, and 2 years down the line, you've become morbidly obese because AI said you're on a 1,000 calorie deficit. Pet your cat for me, Jacob. I absolutely will do. I'm sure he'll appreciate that. Thanks. Anyway, there is nothing else to do. Just to quickly recap, Aussie dollar long. I'm in a Nikkei or a JPN 225 long. DAX is pretty much stopped out, and I'm in a gold long as well. That's currently at break even. I'm watching CAD and US dollar for shorts. They're both in the bin for me. Australian dollar is my number one pick for the most bullish currency right now. I think that's a great pick with the hawkish RPA and obviously the very clear central bank divergence it's got with the dollar and the CAD, or the Fed and the BOC, I should say. Ladies and gentlemen, I'm going to leave you for today. I hope you all enjoy the rest of your days. Stay safe. Don't get margin called. And yeah, see you. Have a good one.
Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream.
Hello everyone, welcome to my segment of the stream. So I do hope everyone is doing well. Just to get things started, if you have any questions, any chart requests, make sure to put it in the comment section. So what has been happening? Well, we did get the PPI numbers. So those are the main things that I'm watching in these weeks. I was watching NFP last week. NFP, just to refresh your memory, was a pretty large miss right there. And now this week, we did have PPI, which came in a bit lower than expected. So inflation seems to be not as high as we expected. So that is, again, a good story for rate cuts. And that is a good story for a weaker US dollar. So if we can open up the Edge Finder, and check the PPI graph. So let's do that. We go to inflation and we go to PPI year on year. And let's see if it was updated. So yes, I believe it was updated. Let's see. Yeah. So basically, you can see that last month we had a bit of a rise, but now this month PPI has been a bit lower. So again, it came in a bit lower than the forecast. So the last thing we do have until the Fed interest rate decision is going to be CPI. So that is going to be tomorrow. And that is going to be something that I'm closely watching. So I'm closely watching the CPI numbers. Now, usually, if you look at, let's say, historical data, you're going to notice that if PPI is a miss and it comes out before CPI, in a lot of cases, CPI will also be a bit of a miss. Okay, that means we could expect some lower CPI inflation. If that does happen, the rate cut story is pretty much confirmed. So let's also check the Fed Watch tool. Let's check that one out. So 17th of September, pretty much 100% chance of a cut. Now it's a question between a 0.25 basis points or a 0.5 basis points cut. So that is now the question. But by the end of 2025, I think, let's say 3 rate cuts are priced in. So 65.4% chance that there is going to be around 3 rate cuts. So that is what I'm looking at. I'm going to look at the CPI tomorrow, and that will confirm the overall story. That will confirm the overall, let's say, data for the US dollar and the overall story for rate cuts. So the initial reaction was, of course, a bit of a weaker dollar, as we can see here. Well, not initially, but then a bit later, sort of a delayed reaction in the dollar, sort of a delayed meltdown. But still, on the day, the DXY is getting bearish. So let me run through the comments. Hey, Slugmeister, Cat Swiss shorts. Melina, if I wish to buy silver, what to buy? SLV or Global X silver miners? Is it better to buy the metal or the miners? Well, it all depends if you are, let's say, trading on a short-term basis or looking for investments. I think for short-term trading, silver, just buying the metal would be a bit more efficient, but for long-term investments, maybe buying a miner could be more beneficial. Now, I'm not proficient in gold and silver miners, so I cannot really give you great advice, but definitely for short-term trading, I would rather put my trade on silver as a metal than on miners. So Cat Swiss, before we do Cat Swiss, I just want to break down the US dollar. I just want to break down the DXY. So this is also a post that I made in the A1 Discord. So if you do want to join the A1 Discord, you can click the link in the description of this live stream and you can use my code, which is MARKO. Okay, you get a discount code, or you get a discount with using my code. And if you join, you get signals, exact entry, stop loss, take profit, and you get analysis of the markets from me, from Nick, and from some other analysts that we have in there. Also, this is a code for the Edge Finder as well. If you want to get the software, you can get a nice discount with my code. So just to quickly show you, I'm currently in Euro Dollar, Euro GBP, and USD CAD, and all of these trades were posted in the A1 Discord as signals. So before we check out Cat Swiss, I want to look at the DXY, And I want to tell you that a lot of people that I see, a lot of traders online seem to be short on the dollar. So they seem to be betting on more dollar weakness. So they seem to expect the rate cuts to do this. Okay, just to crush the 96.4 level and continue going lower. So I personally believe we're gonna find some support at this level. And I don't think breaking that sort of level is gonna be as easy. I wrote about this in the A1 Discord today. My main reasoning is you have to think about who is moving the markets. So who has enough liquidity, who has enough money to move the dollar? Well, it's going to be the big players, the institutions, the hedge funds, the big banks. Now, what happened in January 2025? Well, you had political uncertainty, you had Trump, you had a lot of tariffs. That means you had a lot of uncertainty in general. That means you had a lot of people fleeing out of the US dollar or hedging against US dollar. So basically, they were selling US dollars, they were hedging against US dollar exchange risks. Now that has stopped, I would say, in June, maybe even in May. I would say May, June, that sort of a phenomenon has stopped. So now you would need a massive, massive catalyst to continue selling the US dollar and to continue hedging against the US dollar. Okay. So that is why I believe we currently don't have a catalyst. We currently don't have a big enough reason for the markets to drop lower. And a lot of traders are going to get caught shorting this market right at this level, 96.4, and thus losing their money. Also, if you're online, if you're talking to other traders, if you're in different trading discords and you see a lot of traders or a lot of people or a lot of retail traders being on one side of the trade, which is right now, in my opinion, dollar shorts, and basically advocating for the dollar to go lower, usually the opposite things happens. And also, if you check out the Edge Finder, and we go to institutional positioning history. So this is going to show you the history of what the big players are doing. Lately, they have actually been buying some US dollars. So let's see. Let's do last 10 months. And lately, in the last couple of months, they have actually been, or in the last couple of reports, they have been buying US dollars. See this line, this yellow line, it is going up. That means they're acquiring more and more dollars. So institutions are going long. And I don't want to be against the institutions. I definitely want to be on the opposite side of retail traders. So if everyone in the retail space is advocating for a lower US dollar, I definitely want to do the exact opposite. So I'm going to try and place a trade, or I have placed a trade on USD CAD. So I'm betting on some dollar strength through USD CAD. Why? Well, because right now I believe the CAD is the weakest. So the CAD is the weakest currency pair. Let me just quickly run through. So run through the data. GDP. I did this yesterday, but let's just repeat. GDP is all over the place. So GDP is pretty bad. Labor, unemployment for the CAD. Rising unemployment. So that's problematic. That is definitely a problem. Look at this massive rising inflation in the last 1 year. And then we have inflation for the CAD, which is close to 2%, but there is some room maybe for Bank of Canada to cut interest rates to, let's say, prop up GDP and to prop up or to lower the unemployment rate. So pretty much all of the numbers are looking really bad for the CAD. One more interesting number is if you look at housing prices. You can also ask ChatGPT or like Grok AI. I use AI all the time. It's so efficient. Just post the question, what or give me a graph of the housing prices or house prices in Canada in the last 5 years. Look at that graph. You're going to see in 2022, the graph started going lower. So housing prices were going up and up and up and up and up. And then in 22, kind of stagnation. That is also a good sign that Canada is doing pretty badly. Okay, Canada is really struggling. So I'm placing this bet on USD CAD to go up. Stop loss is below these swing lows. And I'm probably going to be using a trailing stop loss, maybe even implementing some take profits because of these two reasons. So to summarize, DXY, I don't think it's going to go lower. I don't think it's going to go down too much. I think we're going to find some sort of a support level and at least have a bounce to the upside. And the CAD is super weak, fundamentally super weak. So also this position is positive swaps, which you can check on the Edge Finder. One thing I recommend, if you're going to be trading Forex, before placing any single position, go to the Edge Finder, the carry trade scanner. See if you will be paying swaps or if you will be receiving swaps. Now, for example, my Euro GBP, I'm paying swaps. So it's a pretty expensive position to be holding. We can find it here. So Euro GBP, see, so you get paid swaps when you're selling, but I was buying, or I am buying in that scenario. USD CAD, you get paid swaps if you're buying. So I'm receiving swaps for holding my USD CAD position open, which is pretty nice. So that is a pretty good bonus for this position. Okay. Now I did have a request for CAD Swiss. Okay, let's see CAD Swiss, CHF. Let's see. So for CAD Swiss, definitely on a downtrend, but I told you for the CAD, I'm being very bearish. I'm being very bearish on the CAD. I think the CAD is going to start losing some value. I think that is the next big trade. The latest big trade was buying gold, buying silver, but I think the new thing that's going to be, let's say, the position to be in is going to be short on the CAD because of all of the fundamental reasons I listed. So would I go short? Actually, I think it would be interesting to go short here. The Swiss does seem strong from my research. Let's quickly check on the Edge Finder. So I'm going to quickly run through. Let's see. So from the economic heat maps, Swiss. Sorry, that's yeah, that's Swiss. Pretty much the latest data is coming out bearish, but let's do some more long-term analysis. GDP, CHF. It's okay. It's positive. At least it's positive. Unemployment, I think it's pretty low. Last time that I checked. Okay, rising unemployment a bit for the Swiss. So possibly rate hikes. Inflation, let's see CPI for the Swiss. Possibly rate cuts. Yeah, rate cuts. Inflation is really low. So the target is 2%. Inflation is really low. So actually, this is kind of a mixed signal for the Swiss. I would not do this trade. I would not go short on CAD Swiss. The Swiss, I don't have a clear reading right now. If I do have one, it's actually maybe even a bit more bearish than neutral. So I'm really bearish on the CAD. I'm also kind of neutral / bearish on the Swiss. So fundamentally, this is not my favorite trade. I much prefer USD CAD. That's my stance. So let's see. You gave a solid answer for my doubts in the Discord group today. Thank you for that, Marco. No worries. I'm glad to help. If you have any more questions, you can reach me out or you can reach me in the Discord. If anyone wants to join the Discord, link is in the description of the video. You can get a discount by using my code, which is MARKO. Euro USD trade. Yeah, so I do have a trade on the euro dollar right there. And with this trade, I no longer like this position as much as I did. Okay, so when I entered on the 13th of August, I had some clear fundamental and technical reasons to enter. I did get stopped out on my personal IC Markets account, but I'm still in my prop firm accounts and my DarwinX account. So I did decide to place a take profit. So if the price hits 1.17988, I'll be out. I really don't want to wait any longer inside of this position to be in this position. I think the euro has lost some strength. I think lately data out of Europe has not been coming out the best. You can see this latest data reports kind of 50-50, so not the best. And the dollar, as I told you, I'm not expecting a lot of downside on the dollar. So if the DXY does decide to go a bit lower to 96.4, I think my euro dollar trade could hit the take profit. And it's a nice hedge to have. So I have a euro dollar buy, I have a USD CAD buy. So at least one of them should work in theory, right? It's a bit of a hedge. And that is also why I like having two of these positions. If dollar loses value, this one hits take profit. If dollar gains value, USD CAD should go up more, should drastically go up. So that's for my euro dollar trade. Not if I wasn't in a trade, I would not be looking for a setup right now. So Finlay says, thanks traders. Thanks trader Nick. I just made my first million with you. Congrats on the first million. Will the dollar go down so easily? I don't think so, because everyone thinks dollar is going to go down. When everyone is thinking one thing, the markets do the opposite. That is just how the markets work. Only like 5% of people in the markets actually make money, or 95% of retail traders lose. Bitcoin. Hi, Maro. Hi, Marco. Hello, Yoshi. What's up? So let's check out Bitcoin. Let's see, Bitcoin. Bitcoin, right here. Bitcoin is not the best thing, in my personal opinion, right now. We can check the Edge Finder. Let's see, top setups. Bitcoin. Neutral. You're getting a neutral reading, COTS. So institutions are short, retail is long. That's the worst sort of thing you want to have. Also, I've been doing some research about the halving cycle. I think that's the name, the halving cycle. And you can see inside of that halving cycle when Bitcoin outperforms and when Bitcoin loses value. We are now in the part of the halving cycle where Bitcoin actually loses value. It's sort of like seasonality. So if we go to the Edge Finder and you go to seasonality, where's my seasonality? Go to monthly. Bitcoin, you're going to see Bitcoin doesn't like September. It likes the end of the year, October, November, December, but September is usually not the best. So right now I'm being patient on Bitcoin. I don't think Bitcoin is the most interesting thing on the markets. Ethereum, same thing, kind of stagnating a bit. Gold and silver are the hottest things right now. So yeah, basically gold and silver are the absolute hottest, the best things right now in the markets. So I'm not focusing on any crypto currently. Let's see. USD CAD could be a solid trade. Retail sentiment is also short, which is a good sign. True, that is correct. Let's check it out in the top setups. Let's see. Here. USD CAD. Bullish. Okay, we're starting to get a bullish reading as well. Nice. So this is great. This confirms my trade. So yeah, pretty good. As you can see, COTS, institutions seem to be long, which is great. I don't think it will be easy to go down because the euro situation is worse. The dollar is 95 to 93, even if it goes down a lot. Bitcoin just broke resistance level. I mean, Bitcoin did move a little bit, but it's nothing to write home about. In my personal opinion, we did break a level. We had a pretty nice daily candle, but is it something that that brings us back into all-time highs or into a huge uptrend? I wouldn't say so. Overall, it does look a bit corrective, a bit stale here. So I don't have the confidence to go long on Bitcoin currently. Let's check out the Edge Finder. What does the Edge Finder say? Let's see, Bitcoin neutral. So it confirms my analysis. Just put my entire account on USA. Hope it wins against Canada. Nice, pretty nice. That's some great risk management. It's what we like to see. No, just kidding. So if you went long USD CAD, if you're in the Discord, if you're following the signals, make sure you do proper risk management. So what do I recommend? Depends on if you're just starting out, if you're an intermediate trader, or if you had like 3 or 4 years of experience. So what I personally recommend is, let's say, if you're starting out, maybe 0.1 to 0.25% risk. If you're intermediate, 0.5%. And if you're proficient, if you have a couple of years of experience, maybe bump it up to 1%. Completely up to you. If you have multiple positions running in currencies, then maybe doing less risk per trade makes sense. I'm not doing the full 1% on all of these positions. So please do proper risk management so you can definitely follow the signals. But if you lose, if the signal loses, which it can, my win rate is around 45%. So I lose more than I win. But when I win, or in percentage terms, in the win rate, I have more losses than winners. But when I win much more than when I lose. Average reward to risk is around 1.8 to 1. And that's all you need. That's your edge. Check GBP Aussie. Okay, I will. Yoshi says, amazing insight. Thank you, Marco. No worries, Yoshi. So before I check out GBP Aussie, I want to talk to you guys about a new sponsor. It's not a new sponsor, but we have had this sort of a new arrangement with DNA Funded. So if you're looking for a prop firm, if you're looking for a reliable prop firm, you want to expand your trading capital, I highly recommend that you check out DNA Funded. So let me open it up quickly. And if you use our discount code, which is A1 Live, so that's the new discount code. Let me write it down. It is A1 Live. You're going to get 25% off. And I do believe if you reach out to the A1 team right now, you're going to get an additional 5% off. So it's 25% off. But if you reach out to the A1 team right now using the link in the description of the stream, you're going to get an additional 5% off. And what I recommend in terms of challenges is the two-phase 100K. That is, of course, if you are proficient. So you can see it in the comments. You can send the direct message and talk to the team. But anyways, two-phase 100K if you're a trader that has experience. If you don't have experience, of course, don't go with a big account. Go with a smaller account. And again, the leverage is good. The parameters are good. The price is pretty competitive. With our discount, A1 Live, you're going to get an even better price. So with prop firms, it's all about the reliability. You look at the reliability first, and then you look at all of the parameters. So that's it for the announcement. Okay, and now let's continue with the analysis. So we talked about GBP Aussie. Okay, Max says DNA looks good, but sadly they don't have CTrader. The Trade Locker platform is not that good. If you have contact with them, could be good to ask if they plan to enable other platforms. Yep, I'll talk about it with Nick. The Trade Locker platform is okay. I do use CTrader for some of my accounts with other prop firms, but at the end of the day, executing a trade is not that complicated. It's pretty easy to execute a buy or a sell. Most of the work should already be done on the charts. So I will talk to Nick about it. I will look into the Trade Locker platform a bit more. And yeah, maybe they can introduce CTrader in the future. So GBP Aussie, let's see. As far as this one goes, for the pound, I'm bearish on the pound as a currency. Same reason why I'm bearish on the CAD. So the economy in the UK is not doing well. We can look at the Edge Finder. So we can look at see. The GDP for GBP. Kind of all over the place. Latest print was good, but overall some negative prints. Not the best, not the best. Unemployment. GBP. Really rising. It's not as bad as in Canada, but it's rising. So not the best. Inflation, CPI, GBP. Rising inflation. So pretty much every single parameter that we're looking at looks bad for the pound. As far as the Aussie goes, let's do the Aussie. Let's first check out the latest prints for the Aussie. So now you can see what am I thinking. Now you can see exactly how I'm analyzing specific currencies, how I'm building trade ideas. So for the Aussie, latest reports are coming out bullish, mostly bullish. So 71.43% of the data is coming out better than expected. That's good, that's bullish. Let's see the GDP. AUD. It's okay, it's healthy. It's positive, it's even rising. I like that. Unemployment for the Aussie. It's stable, maybe rising a little bit. Yeah, rising a little bit. Let's see, CPI for the Aussie. Inflation going lower. So inflation going lower, that is pretty good. Going short on the pound Aussie may be a good idea. Let's see, GBP AUD. Neutral, yeah, okay, still a neutral reading. If we break this support level, I think this could be a nice trade. So we have a pretty clear support level. At this point, at this level, I would not do much. I would be patient because we can easily bounce. But if we do break lower and continue, I think there is room for a downtrend. I mean, we have a pretty clear area to the first level of support. We have a pretty big gap to the first level of support. So for the GBP Aussie, that would be crucial. I want to get a break of the support, retest, and then possibly to sell. Maybe not even a retest, just a daily candle that breaks the lows and closes below. Okay. So just like that. And I would be happy to look for sell setups on GBP Aussie. So thank you for the GBP Aussie fundamentals mixed. Well, in my personal opinion, in my analysis, I wouldn't say so. On the pound, I'm really bearish. And for the Aussie, the things that I saw on the Edge Finder, I'm bullish. So going short GBP Aussie is, I think, a pretty good idea. So we have come to the end. Did I miss something? Well, I can just tell you that for gold and silver, I'm still hunting for buy setups. Just quickly, for the NASDAQ, I'm looking for a pullback, as always. For gold and silver, I would not buy at these levels, but I would like to see a pullback to support. So a pullback to support would be good. If we can pull back to these areas. We're far above the 20 EMA, definitely overextended. A pullback could be coming. So if we get a pullback, I'll be pretty happy to look for buy setups. And that is about it. If you have any more requests, you can find me tomorrow I think tomorrow I'm streaming at 9 a.m. Eastern Standard Time. So yeah, definitely find me tomorrow. Max says, my experience is more about latency with TradeLocker, but yes, I do agree. So I'll have to look into that. I'm personally a swing trader, so latency doesn't really play a big part in my execution. But for scalpers, it of course is a problem. So I will look into the latency thing. Catch me tomorrow. Have a great trading day. And CPI tomorrow, very important. We had PPI today. It was under the forecast. Watch for the CPI tomorrow. And after the CPI, I'll have the full economic data picture for the United States. And I can give you some good analysis. So yeah, that's it. See you.